So we have just a couple of days left before we actually close off not only this month, but the quarter. And a lot of analysts are going to be scratching their heads, wondering what is going to be coming next, given that this hasn't played out to be as seasonally bullish as expected when considering a post-election year and a post-halving year. So in today's show, we're going to have a look at where the opportunity lies and why you should never short a dull market. So let's get straight into the show content, starting off over here with Bitcoin quarterly returns, Ethereum quarterly returns. And you can see currently both of them are down, with the majority of the pain actually coming in the altcoin sector. And you can see it on this chart as well. We have the Bitcoin market cap now essentially pulling away from the altcoin market cap. And this is creating a lot of pain within the markets. But when there's pain, there's opportunity, and following the pain does usually come the gain. So in today's show, we'll talk about why you shouldn't short a dull market. We'll have a look at where the opportunities are the greatest and how you can maximize your exposure to the upside potential when the markets do turn. We'll also have a look at when they may actually turn, because I'm going to be talking to a bunch of different traders over here. We've got the high time frame, the medium time frame, and the low time frame. Today, we're going to focus a little bit more on the high time frame and the medium time frame. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Also, let me know your thoughts on the market. Where do you think we're going in the next 2 to 3 weeks? And where do you think we're going to be 6 months from now? Will we come out of this, right? Because previously, well, when Donald Trump did take over, which is now, of course, running his second election, at the moment, you can see in 2016, we were hovering right around this point, about 150-ish days after his election, had kicked off pretty flat as well. And then we started to aggressively mark up, right? So you can see it doesn't look like it too much on the chart over here, but you did go through a pullback period and with similar drawdown. And actually, that 2016, 2017 crypto cycle turned out to be one of the best we've actually ever seen. So will we get a repeat of this? Well, only time will tell. As it currently stands, you do need to maintain at least a little bit of a risk-off approach until you get that final signal that fires off. And I'm going to show you why that is the case today. A big part of it is due to the stock market, which you can see another day of red within the markets, right? And it's going to be an interesting close, not only for crypto on the monthly and quarterly, but also for the stock market. And hopefully we'll see some much needed relief in the next couple of months, right? So we spoke about this rally towards the upside, meeting that 50% level on the S&P 500. And that means a rejection from that 5,841 level. It's not all said and done yet. Let's wait for the weekly close to see how this does pan out. But ultimately, we had a warning, and that warning was a drop off over here in volume, right? And when the volume drops off, you're essentially removing the lifeblood of the crypto market, and apathy typically sets in. And usually when apathy sets in, one of two things happens, right? One, price will either drop through, or the second thing, meaning drop through the support levels and drop to until it finds the next major zone of support. Or number two, you'll have a big player that will come in that low volume environment, step in and change the trajectory towards the upside. I don't think we're at that second part yet. In fact, I think we're still at the first part, which is where the volume is dropping off and you're most likely going to roll over here, which means that from the current zone over here, the stock market could still fall significantly, right? If you look over here, we could see the stock market fall at least 8 or 9%. What does this mean for Bitcoin? What does it mean for crypto? If the stock market falls 8 or 9% from here, that's going to be the equivalent of crypto or Bitcoin dropping in the region of about 25 to 30%. Some altcoins could fall severely and even halve in value in that type of environment, right? So am I advocating that you short the market right here, right now? Absolutely 100% not. I'm not saying that. However, I am saying remain cautious until such time as you actually break structure and clear out some of those high levels. Right now, you should be on lower high watch and looking and prepping to buy the dip, which is exactly what we're going to be doing when we talk about the medium time frames, which is coming up in just a moment. So again, guys, smash the like button. Let's help to get the show content out there, and let's continue, right? We've seen some of the high time frame momentum oscillators really start to roll over. This is on your 2-week scale. Now, this is a little bit of a more bearish stance, but that doesn't mean that you can't play the bounces along the way. And if we are wrong and get invalidated on this idea, then ultimately we would have had the long trade from lower. I'm going to show you where, and ultimately you just move your stop loss into break even, and you can ride that next wave and the breakout towards the upside. So what we saw in the 2021 cycle is very similar to over here when we look at specifically the stock market. Well, we had bearish divergences taking place over here on the stock market. We had bearish divergences also taking place, of course, on the crypto market. And now those bearish divergences are starting to play out, right? So we saw that in 2021, we had the MACD cross towards the downside with the moving averages coming from quite a height. And this actually led into a one-year bear market. And you just, as a trader, want to be positioned so that you can protect your capital, right? Not only that, but you got the sharp shooter RSI, which is now rejecting from the critical 70 zone, giving a strong sell over there, adding to that bearish divergence confluence and suggesting that prices are most likely going to trend lower over time. But again, there is some optimistic viewpoints, which I'm going to share with you in just a moment, where you can still take the trade, right? We're also going to be covering this exclusively in the Whale School cohort, which is coming up on Monday. So use the link in the description below. Sign up to Whale School if you're not already signed up. And we're doing an exclusive workshop over there to show you how to build a very concentrated portfolio, right? By concentrated, I mean we're not holding a wide class of altcoins, but we're getting very, very selective on what we're going to choose. And that's part of the parcel in the sense that if we do see some sort of snap back to the mean, you would actually be looking for, as Bitcoin dominance or market cap starts to break away from the altcoins, you'll be looking for that to mean revert at some point, which would actually provide a decent opportunity in the altcoin sector. And I say that with caution, right? You guys know that. You know that I'm very, very, very focused on Bitcoin, and we have been for a long period of time. We dabbled hard into the altcoin season when it was a meme season, and we did phenomenally well over there. And there may be some new opportunities coming up very, very soon, but we have to treat them as shorter term opportunities. And then we can allow those short-term opportunities to develop into longer-term swing trade opportunities if the market permits, which we're not at that point quite yet, right? So there it is. Very similar to the stock market. What do you see over here? You see a drop off in volume. The volume continues to diminish. Price rejecting off of the trend line. And I can't even tell you how many people were buying into this resistance over here. And throughout last week, I was telling you, be very, very, very careful. You have warning signs over here on both the stock market and on Bitcoin, where the volume is diminishing over here and price is coming into resistance. That is an absolute key point where you could theoretically open a short trade. But I would be very, very careful opening large short trades, especially if you're not using a stop loss. That's absolute suicide. Who created stop losses? They say God created stop losses, right? God created stop losses to help you protect yourself. And the reason why I would be a little bit more reluctant to short over here, and instead we're looking for support to be found possibly in the $72,000 region in an extreme sell-off over here. If it does get really, really bad, I'd be looking at about 72K. That is about 15-ish% down. You know, you could come a little bit lower to about 68 if it gets a little bit more severe, and $68,000 would take Bitcoin price down about 20%. Remember when we looked at the stock market, we said you're looking at about 8%, right? So 20% would be about twice the move that the stock market would present towards the downside. And then we're looking for a bounce. So why wouldn't I just short this with size? Well, because you've already got a pretty big move down and you don't want to short a dull market. Why do you not want to short a dull market? Because again, it takes one big player to come in, a market maker, a manipulator in the market, and easily open up a big long trade. We're seeing very, very small amounts of money moving the market towards the upside. So this is part of understanding the mechanics of how these crypto markets work. You could look at the daily exchange volume. It continues to downtrend, right? So you maintain your at least bearish stance until such time as you hit major support, and instead you position yourself as a buyer ready to step in where? At key support levels, right? You don't just step in the middle of no man's land, but you step in at key support levels. And if we do look at this, even if we zoom in on the last month, right, you can see even though you get these small little bounces, it just continues to diminish. It's downtrending. You can see over here, we went from 32.4 billion in 7-day exchange volume to then 31.83 billion was the most recent print, which means it's a little bit of a downtick. It's continuing to diminish. But again, eventually you are going to get some form of relief, and we want to line that up with price, right? So we can use a couple of key factors. One is looking at the CBD spot. This is seeing what the spot traders are doing. The buying pressure, if price is moving towards the upside, is it being supported by spot buyers? That means people buying Bitcoin as the underlying asset, or is it purely a leverage-driven move? There's no divergences taking place right now over here because everything is down, right? You have Bitcoin price going down, you have spot selling, and you have leverage, which is also selling towards the downside. They've had interim moves where they've intraday tried to push things up, but it keeps failing at those key levels, right? So what is the high time frame bias? Well, again, we do cover this in Whale School. This is one of the first things that you will learn about, right? If you do go into Whale School, where we talk about specifically useful tools and resources, as well as moving averages and exponential moving averages. I'll teach you all about that. If you haven't already done Whale School, please do make sure you sign up right now. But you're getting a key rejection. This is why the monthly and quarterly close is going to be absolutely critical and so important. You're rejecting right now for that 21 EMA, and price is moving towards the downside. So this lines up with all these things, right? The momentum oscillators, which are rolling over, it's telling us be cautious. The oil tanker is turning, right? And when the oil tanker turns, it takes a lot of momentum to shift it back. So imagine the oil tanker is going north, and now the oil tanker starts to change towards a northwesterly direction, right? That oil tanker, once it's committed and the captain has turned the steering into a northwesterly direction and left it there for long enough, it means that ship is going to go northwest until such time as it corrects course back into a northerly direction, which means ultimately that prices are most likely going to continue to trend down. But there's going to be big trade opportunities in between. This can take months, many, many months to play out, right? So I want to be clear about that. Same as an oil tanker can take a long time to change from north to northwesterly, especially if it's moving at quite a speed. The crypto market is no different, as well as the traditional markets. It takes time for these things to unwind. So there will be big relief rallies, which are completely tradable. Tradable in the sense where we can pick a concentrated portfolio and we can execute on those trades when that relief comes. You're talking about potentially doing 200 to 300% moves on certain altcoins. And that's what we're going to cover actually in this cohort. So if you're not signed up, please do sign up. Use the link in the description below. Go through over here. You'll see it says Whale School. How do you get into Whale School? I see in the comments you guys are asking, how do you get into Whale School? Very, very easy. All you have to do is go through into the link in the description below. Pick any one of these exchange partner links. So choose one that you don't have. Click that link. Sign up. It will issue you a user ID. Then you're going to come through to this page over here, and you're simply going to put in your email address, right? So we are getting started on Monday with that $10,000 portfolio. We are going to build a $10,000 portfolio, and this is purely exclusive to those of you who come to this cohort. You don't even have to pay the $2,000 for the course. Unlocking your free access is done by using the exchange link below. Come through here, put in your email address, and you're in, right? This is what it looks like in the course. Once you're in, make sure that you come through and you register, right? You'll be taken to this page once you've signed up. This is cohort number 13. Click register now. Come through to the live workshops. I literally can't wait to do this workshop with you guys, right? All right. Now, our biases towards the downside, we have the USDT dominance, which trades inversely, meaning the opposite of what Bitcoin is doing. And as you can see, the USDT dominance is currently caught within this parallel channel, right? Rising towards the upside. And you've just hit this level right here, right now, where it's starting to turn a corner, right? So this could potentially be the next high low. So you had a low over here. You had over here your higher low, right? So there's your low. There is your high lows in the making. And now you could be printing yet again another higher low, which means if this leads to continuation onwards and upwards, that's going to lead the crypto market to go down. But the good news is that this may be the last leg towards the downside before the bulls take over, and then they attempt that relief rally. Remember, the high time frames are unchanged, right? There's major warning signs over here. But this can, again, take months to play out, which means that if you're holding good positions for a couple of weeks, given the bounce, right? So if this moves towards the upside over the next coming weeks and then finds some sort of local high or resistance over there, and then it starts to drop, that drop is going to lead to a beautiful bounce within the crypto market. And I think that will happen in the next, we'll find a low in the next 2 weeks. And then the 2 weeks after that, we should get some really, really nice pumps, which is why I've tried to time this particular whale school perfectly for you guys to get that portfolio in place, right? We'll talk about what the best buys are in that actual course, right? So don't short a dull market, right? If you go through to the things below over here and you go through market cycles, you can have a look at that. And then you can also have a look at volatility, right? If you go through to volatility, we talk about all of these things over here, how to anticipate major market moves, right? We go through all of these various different things that you can look at in order to time your way into the market. That is one of the lessons that you're going to learn about in Whale School. Now, why is it that I believe that bulls will attempt to take over despite the high timeframes being bearish? When I say bulls take over, I mean in the shorter to medium time frame, meaning they could bounce price for about 2 to 4 weeks. And it's got a lot to do with this indicator over here, which is the hash ribbons buy indicator. Usually the miners have a massive weighting on what the market is going to do next, right? This time we have a lot of other factors affecting the market, such as the stock market. We got tariffs, right? And you're going to see how nicely today's session and these charts line up with the major tariff announcement, which I believe is coming on the 2nd of April, right? So just after this monthly close, we might see that last little bit of pain, right, as those tariffs come into play. But we have got the hash ribbons blue buy indicator, which is officially fired off. And what this simply means is that you don't necessarily blindly buy in that exact moment on the spot as it prints, but you look to buy the next major high low. And I think that major high low may be coming into play. As you can see over here, we got the trading range marked off, right? This is Bitcoin's range low. This is Bitcoin's mid-range level over here. There it is, the mid-range level. And then we got Bitcoin's range high level coming in all the way at the top over here. And we've got that downtrend, which has been governing price lower and lower with lower lows and lower highs. What comes following a lower high? Possibly another lower low, which we've lined up with key support. And that's where you would be looking to step in as a buyer. Now, part of the reason why in the next 2 weeks we believe there will be low prices is also because we're about to print the next bear moon, right? When it prints below price, that's a bull moon. It leads price towards the upside. When it prints above price, that's a bear moon, and it leads price towards the downside until the next bull moon comes, right? Now, I'm not somebody at all, not at all, am I into any form of astrology or anything like that, or star signs. In fact, I don't believe that these things are true at all. However, what I have noticed is that these moon phases 100% work. I would say they work about 85% of the time. They've been highly successful. And you could probably even push that into the deep 90s, saying they're about 90% successful when used in conjunction with a trend. What I mean by that is when you're in a downtrend and you print a bearish moon, it tends to work a lot better, right? Leading into those downward moves. And we're about to print the next bear moon, which means our bias is still in the next 2 weeks. We should have some downward price action. And that's why, again, we're doing this particular cohort where we're looking to buy the dip on a select few coins. So the next bull moon, if it lines up with price actually holding support, I think has the propensity to bounce price up and possibly even break structure, taking out what would be the next lower high, which would be right over here, right? This is your next lower high, possibly in the making. We'll see how things play out over the next 2 weeks. So hold me to it. Hold me to it. Come let me know in Whale School if I'm wrong, right? Why? Well, because you can actually interact with me, right? When you come to these live cohorts, it's limited to a select few people. We can actually discuss these things. You can let me know what your thoughts are on the market, and you can ask me questions, right? So let's see. Only time will tell. That's one thing that I'm looking at over there. And remember, this also lines up beautifully with the M2 money supply, which has been driving the liquidity cycles, right? The market is very, very sensitive to the liquidity. It's a liquidity-driven market, crypto, that is. And what we're seeing over here is liquidity has led the majority of the cycles, right? So liquidity has been downtrending throughout this bull run, and Bitcoin lags it slightly by a couple of weeks, right? And you can see the liquidity has now been trending towards the upside in the blue line, and we're just waiting for Bitcoin to turn that corner. So will Bitcoin make that next leg down? You let me know in the comments what your thoughts are. Will we drop down to $72,000 and then be provided with our buy opportunity? I would like to believe so. Remember, in conjunction with the hash ribbons buy indicator, what does this mean? It means price can wick down into that 72K level, which means it would take out that low, but it shouldn't close below that low, which means if you wick down, even if you wick down like that to, $68,000, but price manages to close back above $78,000, which means you only spend a short amount of time with a daily candle wick below, that's your buy the dip opportunity. A strong close above there would show massive demand, and that would tell you that the shakeout is complete. Now we'll reevaluate if that fails, right? If you see daily candle closes below, that would invalidate that signal, and that would mean that maybe we're in much more trouble and we have to wait a little bit longer before getting that relief rally, and we're most likely to play out this downside move. So again, familiarize yourself with the course content. I truly can't wait to see you guys there. Thank you all so much for watching. I appreciate each and every single one of you. Let me know in the comments what your thoughts are, and I will see you all on the next one. Have a great day, everyone, and cheers for now.